Hi traders, welcome to my video on the Demark 9 indicator. In this video, I'm going to show you how you can use this indicator to help you capture moves such as this one for over 200 pips. Okay, so the Demark indicator will basically show you the trend direction. Okay, and we can also use it to help possibly time entry and exit into trades. Okay, I'm not gonna say it's as cut and dry as that. There is more to it, which I'm gonna get into through this video. Okay, so this is the MT4 trading platform, MetaTrader 4. I've downloaded and installed the Demark indicator and loaded it to my chart. This is an Australian dollar, US dollar 1 hour chart. Okay, I like to trade the longer term chart time frames just because I find they give more reliable signals with technical indicators, price action, candlestick patterns, simply because they contain more price data. Okay, and we can capture some big moves like this one without needing to chart watch all day trying to scalp a few pips here and there. So the 1 hour, 4 hour, daily, weekly, monthly does give more reliable signals from my experience and the opportunity to capture big trends. So the Demark indicator you can see here, okay, it plots these lines on the chart. And so the basic premise behind it is to trade in the direction that the line is heading, okay? So for example, you see the line is heading downwards here, here, and here, here, here. So we'd look to short. One may say, well, here the line turns upwards and continues upwards. You see this little area here, okay? However, what I would do is I'd look at the overall picture, okay? And by that, I mean the market is clearly making lower highs here, okay? We're in a downtrend, so I would actually ignore the Demark indicator signals in that instance, okay? Instead, what I do is I trade in the direction of the trend, which is a downtrend in this instance. And the Demark indicator can be a good way to spot reversal points in a trend. Okay, so by that I mean you can see here, when the price crosses above the Demark indicator, okay, we know that there's a pullback and we can then look to time our entry. Okay, so how I would do that is I would use support in a downtrend or resistance in an uptrend. So once I see the price move above the Demark here, okay, and then joins that trend line there, so these two connect, then the third one, we have a inverted hammer, bearish inverted hammer, and a 3 inside down candlestick pattern there. We actually have another 3 inside down candlestick pattern there. That's basically when you have a bullish candle, followed by a bearish candle that's at least 50% of the bullish candle's body, and another bearish candle that falls below the body of the initial bullish candle. Okay, very bearish price action pattern. Along with these inverted hammers, we have one there as well. Up here we have a bearish hanging man, a bearish spinning top. Lots of bullish signals here, and of course the obvious being the lower highs. We're in a clear downtrend. So we can wait for this pullback above the Demark indicator. Perhaps a bit too early for this pullback here. Okay, maybe the aggressive traders may have seen these bearish candlestick patterns here. They may have had their support line drawn something like this. Okay, you can see this resistance as well here. So to be fair, that was a potential breakout entry to the downside there. A more aggressive entry just because the trend's only just begun, but it still had those two lower highs there, or three, count this one. And then a potential pullback here and a breakout. Again, pullback above the Demark indicator, as you can see there, and a breakout to the downside. So two potential early breakouts, but if we just wait for the trend to continue, okay, down to here, then we have a more of a deeper pullback, a nice M pattern formation there, and a breakout to the downside here. The market continuing to make lower highs. Either of these entries would have enabled us to capture, I'll just zoom out, to capture this move, which is actually potentially still ongoing if we hadn't already got out, but this move, you know, over 400 pips, probably would have exited once the price moved up here. That's because I would have had a trailing stop in play. I would have initial stop loss on this breakout here. Would have just placed above this high, so around 10 pips, which is really tight for the 1 hour time frame. Okay, and then as price fell, I'd move the stop loss first to break even. Okay, so entry point, And then I'd just be moving it above the highs, above the highs, above the highs, above the high, 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 and probably here. This would have been the last trailing stop down here. As price moved up, it would have probably taken out the trailing stop. That's if we didn't exit manually once we've seen the market start to make these higher lows and we had all of this price consolidation around here as well. Okay, but that being said, still would have been a really good trade. You can, of course, re-enter again on this downtrend. If I just zoom in for you, show you another Demark. Similar setup to what we had before, so clear downtrend. Okay, so we're going to take the sell Demark signals. We wait for the price to break out and then pull back, pulls back here. So what do we do when there's a pullback? We draw our support level, okay, and then we can trade a breakout there. Market's making lower highs, okay, lower highs there, obviously lower highs here as well. Nice wedge pattern formation. I do have videos on wedge patterns, ascending patterns, descending patterns. Plenty of videos. It's good to just be aware of these patterns. I actually prefer price action over technical analysis myself because I find that technical indicators can be lagging. It means that they don't always stay up to date with what price data is doing, whereas price action tells you what's happening at any given time. Plus, technical indicators can repaint, which means they change after the fact. So they can look good historically over charts, but in real time may not necessarily have had those same signals. Okay, so initial trade, as we mentioned there, if you had missed the boat on that one, okay, you don't want to sell too low and you don't want to buy too high, but you still would have had ample opportunity. You just wait for the next pullback. So you had a pullback above the Demark here, potential entry there, okay. In fact, this is backed up by the fact that you've got the support level there as well, okay. So I had the support level there, support level here, and we know we're in this downtrend, potential breakout entry there. Or you could have waited for a deeper pullback like this one, nice consolidation. That support level then becomes resistance here, price consolidates, and a big breakout to the downside. Remember, when the Demark turns up, we're not trading long because we're in an overall downtrend. So we're ignoring long Demark signals. And this is actually NFP, non-farmers payroll, first Friday of the month candle, which has caused that big move there, but we could use that momentum nonetheless to hop in on this downtrend. Again, if you're late to the party, you've missed the boat for a third or fourth time, wait for a pullback. We have our pullback there. And again, the same principle, we just draw a support line. Support holds up well, however, bearish again, candlestick patterns, 3 inside down again, a bearish spinning top pattern. Okay, all the signs are there. This resistance level's holding up well. The market's making lower highs. Textbook trade on a breakout there. That support then becomes resistance. Okay. And you can see some traders even wanted to jump in there, but that's fine. Either of these breakout entries would have been okay. As I said, you don't want to sell too low. After this move down, you might just be waiting to see how things play out once price crosses above. And this is more of a consolidation now. After this move here, okay, this, you can see price starts to consolidate here. All right, so we're in more of a range. So what I would do in that instance is I'm not going to sell on the breakouts. I'm just going to wait for a trend continuation, okay? And then one could argue that here, okay, price does continue to fall down here. And, you know, you could have taken this breakout there. There still would have been something left in the move. You could have just, or you could have waited for the trend to continue, then have a pullback. Okay, pull back up here, draw your support, and then enter on the breakout. As you can see from these big bars, traders were watching these levels. Okay, again, the Demark does turn in an upwards direction. However, zooming out, despite the Demark turning up here, we know the overall picture is short. Okay, so we're going to take short trades only. Okay, so you wait for the breakout and pull back and then breakout in line with the trend. What some traders do, I notice, is they'll use the Demark indicator, and they'll wait for the pullback. Like, let's just say, I have cluttered the chart, I will admit, with a few lines now, but for argument's sake, let's say we have this pullback here, okay? You can see that downwards trend, pullback above the Demark. Some traders will trade when the price crosses back below the Demark, like here, okay, which is fine if you want. See, but then here you're going to be if you do that, you can sell at the low or buy at the high. Like, you wouldn't necessarily want to sell after a move like that. Instead, I'd be looking to sell on a breakout of support, okay? Because I don't want to sell just before a support level. I want to see if it holds, okay? Just like I don't want to buy against resistance. Here again, if you sold when price crossed the other side of the Demark, you're selling at the bottom of that candle. It's not a good idea. Instead, you want to wait for a pullback and then trade on a support. Because you see, if we took this support trade, this breakout of support here, it would have been much better than waiting for the price to cross the Demark there, okay? If the Demark is facing down, that can be our signal. We don't need price to cross the line below, okay? So really, I personally don't think it's a necessary indicator, in my humble opinion. I would just rather draw a trend line, and you can look at this chart and you know the market's moving down. You don't need an indicator to tell you that. However, I do appreciate that it can be a good way to gauge visually if there has been a pullback in the trend, okay? So this has been a short trend example of a Demark indicator strategy. Okay, now I just want to show you a quick example of a long trend strategy. It's the same strategy using the Demark indicator. So we have our support, we have our clear uptrend, market making higher lows. So we're going to look to place long trades or buy trades. So what we do, okay, is we wait for the price to break out and then pull back. Okay, so we can see a level of resistance here. So this is the initial trend. Then we have the pullback. Okay, this resistance 1, 2, 3, 4, 5 multiple times is held up. No coincidence that there's a breakout there with a big candle, an opportunity to enter into this uptrend at the ideal point. One of the ideal points, stop loss again below the low this time, around 10 pips, relatively tight for the 1 hour chart time frame, and 140 odd pips profit potential. Again, you could have used a trailing stop, just moving the stop loss to break even, and then just keeping it below the lows, below the lows, below the lows, just to milk as much of the trade as possible. You can always exit when you see the market make lower highs as well in this consolidation around here. Okay, last thing we want to do is have a 10 pip stop loss, see price go up 20 pips, get excited and exit the position. Whilst it still would have been a 2-to-1 trade and a profitable trade, we still just left too much on the table. You can close part of the position on the WEP if you want, just to bank some pips, but ideally we want to cut losing trades short and let winning trades run as much as possible. Then we have the same thing. We wait for a breakout of the Demark, okay, here, and a pullback, and then you can trade that breakout there. Same thing here, pullback to the Demark, and a breakout above. But again, you don't want to buy too high up. There is a little bit of gas left in the tank around here, but still you don't want to be buying at the high, getting caught in a potential bull trap as well. If we go down here, I know we said to take this entry. I think it's worth mentioning that as this is the 1 hour chart, there is plenty of price data in here to perhaps have considered this resistance level. Okay, we don't ideally want to buy into this resistance, but once we see this resistance level is breached here, then holds up as support, could have been a valid entry point, as you can see from that big upwards candle there. Okay, and even after that, there was another pullback and a potential entry here. So ample opportunities to get in on this particular trend. You don't necessarily need this Demark indicator to have caught those, but it can help you to identify turning points in terms of a pullback and a change of trend direction as well. Just make sure you're aware of support and resistance around you. You don't want to like buy just before resistance, in my opinion, and potentially have price turn straight around, just as I wouldn't want to sell on the support level. I just want to wait and see if price tests it. Ideally it holds up a few times, and then on a breakout we can just have like even a pending order slightly above resistance or below support. Okay, so don't forget, have your trading emotions in check. Don't let fear, anger, and greed cloud your trading judgments. Don't overtrade. Don't force trades that aren't there. Don't revenge trade. Don't get FOMO, fear of missing out. And as always, practice on a demo account to begin with. Good money management and timed entries. You can potentially capture some good moves. And to summarize this indicator, I honestly don't think it would improve my trading strategy greatly, if at all. Simply because if we just remove it from the chart, I mean, I can still trade a trend with breakouts without that, and just having a good money management and awareness of candlestick patterns, as I mentioned earlier. You know, 3 inside up pattern there, bearish candle followed by a bullish candle, 50% of the bearish candle's body, and another bullish candle that breaks above it is a signal in itself. Wouldn't take it blindly, but it could have been a good indication when price shot up around this resistance level that we were in a bullish scenario. Okay, hopefully you found something useful in this video. I appreciate you watching. If you can like and subscribe, that would be great and really help my channel so I can keep making videos to educate traders. Thanks for watching. Catch you on the next one.